Hello and welcome back to the NWR Communications Virtual Investor Conference. It's Series 8 of the event. It's really good to have you with us as we round out this Monday afternoon with TEK-Ocean. So the company specializes in providing integrated services solutions for the energy industry, currently weighted toward offshore, where TEK-Ocean deploys leading industry expertise and equipment to provide customers with an integrated range of services from project feasibility to design, manufacturing, equipment supply, delivery, and through field life support as well. A reminder that if you have any questions, you can submit them using the button at the bottom of your screen. We will be keeping a close eye on them throughout, but we will save questions until the end of the presentation. And so we have Brendan Brown, who is non-executive chairman of TEK-Ocean, joining us. Now, this is a currently unlisted company, but soon to be hitting the boards. Brendan, welcome.
Yeah, look, thanks very much. So look, what I'll do is I'll just give a brief introduction to TEK-Ocean, just with the current cover page here. As stated, we provide a integrated service, primarily or founded servicing the offshore oil and gas industry, provide logistical support, marine services through our wholly owned vessel called the TEK-Ocean Spirit, which is a large Norwegian designed offshore service vessel. And we provide subsea intervention services and decommissioning services, which is actually a very large growing area for the oil and gas industry in Australia. We're local. We've grown out of the Gippsland Basin, which is perhaps the most mature area offshore Australia. And we've been involved with providing ESSO with turnkey solutions to some decommissioning of two fields known as Blackback and a Seahorse Tar one most recently. We're also bidding on a substantive amount of offshore decommissioning work that is slated to be commissioned over the next 12 to 24 months with some substantial contracts. And over the next 20 to 25 years, it's predicted that offshore Australia, and this is an independent report by Wood Mackenzie, that there will be $40 billion US of decommissioning work in the oil and gas sector offshore Australia. The skill sets that we have uniquely provide us with an ability to also service the emerging transitional areas of additional tie-ins of gas fields and also offshore wind, of which we were the first Australian contractor to provide some mid-ocean services and servicing of the mid-ocean buoys for what was mooted to be the largest offshore wind farm offshore Gippsland in Australia, and we have a good contract with TEK-Ocean for that first stage of that project. So if I could flip over to the next slide, please. Thanks, Peter. So the disclaimer, we'll take that as read, and people can read that at their leisure in the future. So as I said, just to repeat, we provide marine services, logistics-based shore services, and at the moment we're actually providing substantial services to Beach Energy out of our Port of Geelong. We operate out of a number of key ports around Australia. We also provide, as I said, subsea services, engineering and project management services. And what we've seen within the industry and also special oilfield services, which I'll come to in a minute, what we've seen around the industry is the larger E&P companies and energy companies over the years have continuously demanded and outsourced services. And what the value offering that TEK-Ocean can provide is an integrated service. So for instance, if there's a well intervention or some sort of decommissioning of a wellhead, there's engineering associated with that. And there's actually some machine shop work associated with that. And there's a number of logistical services associated with that. So we tend to bundle them together and provide almost a one-stop shop to companies. Our revenue has been growing and averages $20 million plus per year. And we've had an averaged EBITDA over the last 4 or 5 years of 4 million plus. The IPO that we're planning to list, and I'll give the reasons why we're planning to IPO the company, has an enterprise value of $18 million. So if you looked at the EBITDA to enterprise value, you're looking at a multiple of 4 or 5, which represents, we believe, quite good comparable value compared to small, let's call it small micro cap companies. We have a large growth opportunity, as I alluded to, in the emerging decommissioning market, and also with the potential to access and provide very value services to offshore renewables as time goes on. We're seeking to list on the ASX to actually raise somewhere between $5 and $8 million of new capital, and we want to apply that towards effectively multi-purposing our vessel to provide further value-add services to decommissioning. We can see a market gap where there's, in fact, it might cost you, for instance, anywhere between $100,000 and $500,000, actually probably between $200,000 and $500,000 a day to bring a rig in and to do some work. And we believe a certain amount of work of decommissioning can be facilitated through our vessel. And so we're actually looking at providing extra services in terms of repurposing the vessel so it can not only provide platform support services, such as providing water, fuel, diesel, taking equipment out to and from offshore platforms and rigs, but also providing intervention services by way of having greater lifting capacity, having well intervention services, and being able to provide well access services. And that's going to take an investment in our vehicle, which is why we're looking to raise the money. We've also got a bit of a business model where what we do is we actually buy off companies some of the running tools and running gear. We maintain them and then give them a rental agreement to be able to rent the tools back. And we see that as a sort of a cumulative business opportunity for us to be the store and maintenance and provider, and then we can actually use those tools and rent them out to other companies. So we're almost becoming a pool of available resources, which is very efficient. Normally what happens with an offshore project is a lot of the purpose-built material is written off against the project, and then someone will just leave it in a yard somewhere and won't maintain it. And then suddenly, when it comes to either a stage 2 or a stage 3 development or decommissioning, suddenly they need it refurbished. But what we're saying to the customers is, look, we'll take that off your hands, we'll maintain it, and then you can rent it. But what it allows us to do, and we've got some really good case studies, we've actually been able to then maintain the equipment and actually expand its capability and then rent it out to other customers and make a very good margin on that business. So the next slide, this is a historical revenue of the business over the last 12 years. And you can see, whilst it's been volatile, the company was first formed in 2008, right around the time of the GSC, and it was the first year of loss and the only year of actual free cash flow loss the business has had since its inception. The last 12 years, we've had very, very strong EBITDA, and you can see there's a general trend there going up. And this has all been financed out of either retained profits or debt. And what the company has been able to do with its strong EBITDA, and if you could just flick to the EBITDA number there, hopefully the slide will show that. I can't see the EBITDA on there, but essentially the company's been growing from an EBITDA of anywhere between 1 million at the start of around about 2009. But once we've got to 2019 and 2020, we're on a run rate of about $4.5 to $5 million EBITDA a year. And the company's used that to repay bank debt, which it used to actually purchase the vessel initially and also fund a lot of the subsea running gear. At the time of float, we expect to have anywhere between $5 and $8 million cash on the balance sheet and debt of around about $7 million. So really, here's a bit of a service overview, and this shows that where the company participates at the various stages of the life cycle of the energy business, if you like. So we provide design services, construction services, operation services, and decommissioning. And as I said, primarily I would suggest that we tend to operate in the operation support, logistics, and decommissioning, and that is where the sweet spot is. And then we provide actual design and mini construction services to support those types of operations. To the left, you can see the TEK-Ocean Spirit. The replacement value of that would be in the order of about probably $17 million US. It's sitting on our balance sheet at about $6.5 million. We took an impairment against that vessel last year, and we did that for a number of reasons. One, it came off a very long contract with a large E&P company, and faced with COVID and the outlook of the oil price at that point in time, and the fact that we were planning to list, we decided to write the vessel down to about half of its book value, take the hit ahead of asking people for new money, and it also enabled the company to bring forward its accelerated depreciation, which actually had some taxation benefits to us in terms of free cash flow. You can see there logistics, Shorebase facilities, and as I said, we're operating out of Geelong, and we've got a fairly long-term contract at the moment servicing Beach, which off my memory is somewhere between 5 and 12 wells. They're drilling there and supporting them. Our key facilities, these are the locations you can see. We operate out of Gippsland, and that's really where the company first founded itself. And it was able to, as a smaller private company, able to effectively grow in a niche environment where it really wasn't the focus of support for perhaps the bigger Western Australian operations. So the company, as a privately funded company, was able to, I guess, incubate there and grow. And I would say the bulk of the turnover of the business is coming out of the Gippsland Basin at the moment in terms of servicing SO, BHP, Beach, and Cooper, and so forth. We are bidding for a number of fairly lucrative jobs offshore Western Australia, and that would be a natural expansion for us with our integrated services. And you can see there, just over to the bottom left, you can see there's a support vessel there for the TEK Spirit. And also you can see the supply base. So we warehouse stuff, we look after people's drill pipe, all sorts of subsea equipment and so forth. Marine terminal, we have a lease there, which has given us effectively monopoly access to be able to provide support for particularly ExxonMobil in the Bass Strait. The vessel itself, as I said before, is a North Sea spec vessel built out of Norway, and is able to have superior uptime compared to some of the newer vessels, which aren't as how shall I say, robust, and their operating window isn't as much. So if you're operating in southern waters particularly, this vessel has a real competitive advantage. So look, we deploy things like remotely operated vehicles, which give access to wells and reduce the ability to have to use divers. It increases safety, and also a lot of surveys need to be done as this legacy equipment becomes older and older. The environmental regulator is asking for more and more surveys and information about that. And just to give you an idea, it's approximately 180 exploration wells in Gippsland Basin alone will need to be additionally decommissioned or cut off below the mudline at some stage in the future. And the environmental regulator for Commonwealth Waters, which is where we operate mostly, is increasingly putting pressure on service notices on the major operators to decommission and rehabilitate. And that's where our key business is. You can see there some pictures of some of the tools and equipment that we refurbish and we manage and we look after on behalf of our clients. And then they're run on the rig, and we usually put our company people on the rig, and we've actually done the detailed design, and we've actually done some of the operational review. So we're providing a real integrated service there, and we expect to increase our maintenance and inspection services. Just to talk to special oilfield services, this is equivalent to providing refurbishment, thread cutting, and we've got a number of key licenses which are licensed internationally for drill pipe, and also fitting and turning, and also testing and pressure testing equipment there. And that's our facility in Western Australia that we use, and we get a lot of work from the big oil companies, like the Woodsides of the world and so forth. and we also rent out our tools. And you can see that there's probably the second picture down on the left. You can see there is a spool that basically we purchased off BHP, which was used for one job. We refurbished it. We've now used it on several jobs in terms of winding out a flexible pipe and so forth. We just flick over the next slide. Historical financial performance. As you can see there, the company has quite good gross profit margins. We've got, and these are pro forma, and I'll talk a little bit to that, but you see their gross profit 12.7, 17.1 and 15.3. That's on roughly $20 to $28 million of revenue. EBITDA headline was 3.9, 5.3, and then negative 2.4 for last financial year. And as I said, that's because there was a non-cash impairment of $6.5 million for the vessel. If you adjust for that, the operating cash flow, or the proxy for that, as adjusted EBITDA, was about 4.6 million. So very, very strong cash generating business. And as I said, we've plowed that money into either new capital equipment or repaying debt. If you just go back to, just before we go to the next slide, just jump back, free operating cash flow per share. And this is quite an important multiple, I think. You've got about 12 cents, 23 cents, and then 12 cents, and the offer price is 50 cents. So I'll let people do the arithmetic, but that's about 4 times its free operating cash flow per share. So we think the business is quite fairly rounded, and on adjusted EPS, 11 cents, which puts it on a PE of less than 5 on a historical basis. Okay, so look, this slide here is meant to give you an idea of the key, I guess, segmented result of the company and how we internally account for the different operating businesses. So you've got marine, which is primarily the vessel, logistics, port services, and so forth. Consultancy, which is primarily, we have consultants in-house at companies and we make a margin on them. And we use actually the network and the alumni of the company. We have a lot, it's well over 100 years of experience within the board alone, to be able to use them to sell and bring in business to TEK-Ocean. Oilfield services, you can see there, I was explaining what that is, and that's sort of fitting, turning and testing and so forth in West Australia. And engineering is where we come up with new innovative ideas in terms of problem solving for our clients. And without giving the details of one particular project, but we were involved in a fairly large decommissioning project in Bass Strait a couple of years ago, and one of the majors around the world quoted that a certain price, which was probably double what we were able to quote, and they said they wouldn't even be able to start for 2 years, and TEK-Ocean was able to complete the project within 12 months. And that's the sort of value add that the clients are seeing. Business units revenue, it's quite interesting to look at the half year 20. So this is the half year ended December 20 versus half year 21. The variability within the business, and what that highlights is, to some extent, the diversity that the company has. So you end up with one section up in one period and another section down, and it's actually one of the strengths of the company. And with the labor structure that we have a core group of about 40 full-time staff, and then we supplement them with contractors to manage the variability of the businesses from time to time. So we flick over to the next slide. So this is the offer, and I'll bring you to the key points. We're looking to raise between $5 and $8 million. The use of funds, off the top of my head, about $1 million will be to go to repay debt and remove directors' guarantees, and there'll be about roughly $500,000 to $700,000 of listing costs, broker fees, and legal fees and admission fees and so forth. And then the rest of the money will be put into capital equipment, primarily the bulk into the vessel and some in some subsea running gear. And then the rest is additional working capital to service the business and have some contingency funding going forward. Market capitalization is relatively small, 17.5 million to 20 million. And as I said before, the enterprise value is roughly $20 million. And we're raising we've got an EBITDA historically running at about $4 to $5 million. It may be a little less this year, We haven't got our audited numbers, and so we're not able to disclose what that would be, but that would be because we're carrying costs associated with restructuring the company and preparing it for float. If we flick down to the next slide. Okay, so look, this is the outlook, and this is why the company is floating. It's to be able to, firstly, we can see a lot of opportunity, and we're actually bidding for some jobs, and we need to actually invest in our capital equipment in order to perhaps capture the most market value out of those jobs in terms of the vessel and subsea running gear. And this is to the right, you can see this Wood Mackenzie report, which anyone can acquire. But you look at those blue lines there, and you can see already by 2021, and we can see this growth up to 2030 of decommissioning, and that's over $1 billion a year, by 2030. You've got cumulative up to sort of 40 to 50 billion by 2050. My view is that this curve, if anything, is going to be brought forward. There is some regulatory inflation, is what I would call it, where the regulator is becoming, so the specs for decommissioning and the standard that's required in terms of rehabilitation is only increasing, it is not decreasing. So this is under current expectations where companies are being asked to, well, if you've got a well out there and it's not producing anymore and it's sat at the bottom of the ocean for the last 5 years, even though you're producing from other wells within the field, we want you to decommission them. And that's the way things are going. And secondly, for instance, in the past, you might have seen, they might have said, well, we'll let you leave a plastic sheathed pipeline on the ocean floor because it's trenched and you can leave it there and so forth. The government is now saying you need to pull that up because eventually that plastic sheath will break down. Steel's a bit different. Potentially it can corrode. You can leave it there provided it's safe. And it actually forms artificial reefs. But there's a lot of additional, I think, scope creep in terms of the decommissioning obligation, and that can only benefit TEK-Ocean. What we need to do as a company is be ready, willing, and able to be able to service that market. And we believe at the moment we're the only local competitor. We have beat some international tenders, as I said, on 2 particular jobs already, proven in Bass Strait. And there's another particularly large job that could be many multiples of our annual revenue that we have already been shortlisted and beaten a number of very large international companies in Australasia. The renewables market is exciting. Just to drop back to that previous slide, you can see there, these are very rough estimates. It could increase up to 40-fold by 2050. The point I would like to make here is the services that we provide are naturally able to provide great services to the new renewables market. So it becomes a bit of a renaissance in terms of how do we use our offshore acreage and how does that benefit the community. And so the skills and assets and resources and logistics we have are equally applicable to offshore renewables, for instance, wind and wave, particularly. Right, next slide. So investment highlights, I think I've highlighted that. One of the things I'd like to point out is I think, generally speaking, Australia is a long way away from the rest of the world. And what I mean by that in terms of the energy market might be the North Sea in the UK, or might be the Gulf of Mexico in the United States, or offshore Brazil and the really big markets. We've seen a large number of LNG projects built out over the last 5 to 10 years. But what you generally see in terms of employment and activity within those industries is they peak at the construction phase, and then all the big guys disappear, and they, for instance, they need much less staff to operate. And I can see there is a number of players looking to move out of Australia. And what we see is a benefit because we have trained people in places like Melbourne and Perth particularly, where there's some very, very high skilled people. And we see TEK-Ocean as positioning itself to be a nimble and a local supplier with local people on the ground who can meet the clients and provide them with value for money services and maintenance. Now, if I just want to flick to the list of clients, if we've got that slide there, just Peter. Yeah, there we go. So look, these are the companies we have master services agreements with. I could tell you it's very, very hard, for instance, to get on the books and be a quality recognised service provider for the likes of ExxonMobil. You know, you have to really jump through the hoops, and the BHPs of the world and the Chevrons, and we've all got master services agreements with most of these companies. And also when it comes to big projects, we have one-off agreements with them as well. But TEK-Ocean is very highly regarded, and within the alumni, as I said, we've all got connections of people either into these companies who are already contracted in there, or have already got work with all of these companies at the moment. So with that, I think we'll go to the completion slide. Our board of directors, we can talk about ourselves. We've got actually just go back to senior leadership team, actually board of directors first. We've got a very, very skilled director set, myself, Alex Biro. I've known him for 20, 25 years. We've worked on a hell of a lot of work together. I've helped the guys out for the last 10 or 12 years, and very, very intensively over the last 2 or 3 years. Steve Robbie, Keith Thompson from the North Sea, and done a lot of work internationally. Rob Thornton, who's got over probably 40 years of experience, 50 years. He used to be one of my supervisors at BHP. Exceptional field experience, and also is an astute businessman, and has done very, very well with a number of direct investments in this industry. We flick over to the next slide. The structure of the company's management day to day. So all of the other directors are non-exec, although Alex Biro tends to provide some additional business development services, and Keith Thompson providing some additional subsea services on a contract basis. We've got a structure where we've got a senior leadership team. Rod Hislop, the CFO. I've known him for over 20 years. He started off as a graduate with Arthur Anderson, and worked for Shell for 10 years, both upstream and downstream, and very, very reputable guy. Lots of experience in the industry. Jordan Glanville topped his university. He's a naval architect by training. He's our head of operations and has been working with the business for at least, I think, probably 10 plus years. And so he's grown with the business. John Clancy, excellent operator. I won't mention his age, but he's younger than me, but he's also got probably operating experience for about 19, 20 years, and worked for some of the biggest contracting and supply companies. And he's our business development operator. So what we can see here is the indicative timetable. We've got prospectus date, which is, we put 16th of July. It's now, the prospectus is live. We had the two weeks exposure period at ASIC, and the offer is, the offer closing date is the 20th of August, although we've got a lot of interest from a lot of people, so it may close early, but we'll just see, because we want to attract the right type of investors. So with that said, I'll take everything else as read. And Peter, what I might do is throw back to you with any questions that people may have on the business or the assets or the future outlook.
Thanks a lot, Brendan. You can probably take a breath now too.
Yeah, thank you.
So I'll hand it over to our hosts for any questions that may have come through.
Look, I think that we've run out of time. Just in the interest of keeping things on time, Brendan, that was very thorough. And look, we wish you well as you move toward that ASX listing. It's definitely a momentous occasion in the journey of any company. So we wish you well.
Thank you very much. Thank you.